What is going on, everybody, and welcome to another weekly update. What I like to do in these videos is to provide you some upcoming events, some upcoming earnings to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market in which we are in. So, being said, I am going to pull up the sheet. First thing today, kind of see what we got here. So, like we like to always do, is to kind of give a brief overview of last week. We had the PPI last week. The market really wasn't doing much. There isn't a lot of events currently going on as of right now, big pivotal events, in my opinion, essentially that can change the dynamic of the market aren't essentially until the monetary outpour or core. That's why I have them listed on the sheet. Aside from that, typically there'll be some events. I think we have some upcoming events. We need to understand that there's going to be a lot more weight on the data, again, considering that we're flip-flopping on determining if we're going to get a 50-point basis move. Now, coming into this week, we really didn't have a lot going on. The PPI came in super hot. So with that being said, the market moved off that. And then you had Bullard again following up with talking about a potentially 50-point basis move. Now, he's not a voting member, but he was a voting member. And so he's holding a little bit more weight than usual. So being said, the previous week, he said the same thing. He said 50-point basis move, then Powell came on. And then this week, he said potential 50-point basis move. Now, this is something we've heard before, is that they kind of grease the skids. Some Fed members are greasing the skids to see how the market will react. And then we take it from there. So it did cause some bit of a sell-off into Friday in the back half of the week. Then the market kind of pumped back up to fill some of the gaps towards the end of the week. So that was pretty much last week. We did have a couple earnings, Airbnb. Again, expectations are so low that it really doesn't matter. As long as they're beating expectations, the market's still trying to pump. So that's something to consider. But with that being said, coming into this week, we do have some data, the core PCE on Friday, which is going to be it's going to be pivotal. It's going to have intraday move, but again, if it misses or anything, it's way outside the expectations. That you're going to get market moves like we did on Wednesday. And on Wednesday, we have to understand that PPI is going to get changed. If it's shocking to the market, on the next report, more than likely it'll be changed, just like we saw on the core. Again, they are trying to prevent panic, so they're going to keep altering reports until it's not introducing panic. We do on Wednesday have the FOMC minutes. That is going to have some weight because, again, a lot of people were, they expected a 25-point basic move, but now they're a little concerned because of the fact of Bullard reiterating 50-point basis move because the PPI came in a little hot. Now we got the PCE. I think people want to see where the consumer is at. So the consumer spending habits have not changed. This is what is concerning. Again, a lot of people are taking HELOCs and taking homeline equities of credit on their home, and then to just keep afloat. And if that doesn't work, if the housing market, which is dipping and supposed to be dipping quite a bit, there was even talks about this week about even in Canada, they're projecting the housing market to drop, I think, just over 30%. And so that's just showing you what they are expecting, and their housing market is absolutely absurd. And so ours is roughly projecting in the mid 20s. Now, housing, I believe, is 20%. It took a 20% haircut back in 2008. And so we are projecting to get close to that into this year. And the reason being for that is because of the fact that, consumer spending is still the same. Credit cards credit card debt is at all-time high. We have inflation that's still sitting at 6.4, showing signs of starting to push back up, which is the concern. Something I talked about. If it happens, which was going to happen at some point, is going to reset the clock. Now, up to this point, you've had the Fed essentially leading everybody into thinking that it's going to be pivotal, that we're going to have a soft landing. The whole soft landing thing is a bunch of jargon. 1 week it's one thing, the next week it's not. 1 week the whole world is ending, the next week it's not. So there's a lot of flip-flopping, but ultimately a normal cycle would be that inflation would go back up and potentially even go over 9.1. Now, you can alter the reports however you want, and that's what they're doing to try to prevent panic. But we all know all you got to do is take your vehicle out to go buy groceries and to pay rent, and there goes essentially a good chunk of your money, if not all. And so, yes, there's good employment numbers because people have to work 2 to 3 jobs just to stay on top of their regular everyday living expenses to just live. So that's why there is showing signs of disinflation on other aspects of things, because there's no demand there because people are just trying to survive. So you can't pretend like that's not happening. Now, being said, if core inflation starts to increase more from what it already is, the Fed haven't stopped raising rates. This is something I talked about. It's going to go in phases. You're going to have that first where they start reducing rates, and then you're going to have that lull period where they just hold rates, and then they're going to start reducing. First phase is reduction and increase of rates. Then it's in a holding pattern, and then phase 3 is essentially actually reducing the rates. And so right now you see a small reduction in rate increases. Now that's just a small portion. It's still not stopping rate increases. We might just continue to move 25-point increments from this point. But what is concerning is on the core, it's only dropped 0.1%. And we have to understand that we increased rates at such a rapid pace at 75-point basis moves, 75 bips, and it hasn't done anything. Right, it has a lagged effect, and it still hasn't done a lot. And if inflation starts running up, we're going to have to see potentially another 50-point basis move if things start getting out of control, and then potentially another 75-point basis move if things start running back up. And that is a concern. And so we might not even get out of phase 1 just yet. It might be increased again to stay on pace with inflation. And so that is a concern about resetting the clock. And the market might start to try to, people like to talk about pricing in. The market might start try to price that in. And that's what I thought we started to see towards the back half of the week. Now the question is we are getting into that natural down cycle. February, March period is when the market starts to sell pretty heavy just naturally without any essentially gas or headline news to feed it. But right now, there could be concern if growing inflation starts to push back up, that we haven't potentially hit a peak of inflation, you're going to introduce panic. And especially because I don't think it would have been as bad if there wasn't this whole thought process behind, we're getting out of inflation. We're gonna have a soft landing. And then they got to a point to where we're gonna have a no landing, whatever that means. There's not a soft nor a hard. So I mean, people are just defining whatever it wants to be, But the case is inflation is holding. Inflation is getting sticky at 6.5, 6.4, which is not a good sign if you're trying to get down to 2. So you're going to have to be more aggressive with the rates, or continue to raise rates at 25-point increments until it starts to come back down. Problem being is if inflation jumps on the next report, that's going to be startling, because it's going to lead right into, okay, well, what's the Fed's next move? If they hit a 50-point basis move, you're going to drop the market probably 100, 150 points in a couple days, or if not more, because you're going to introduce panic at that point. So you can't say we haven't seen a bottom yet, because this is not over. You have to understand the scenario and the thesis in which I talk about is it's a couple years, right? To get out of where we're at, it takes a a quick recovery maybe will take a year or two to get out of. A lot of people are already talking about potentially the summer of next year will actually creep out of this. So we're going to get one really bad hit at some point this year, and then it's going to shift to a recovery. And that's what I've been talking about, is you need that bad thing to crack and break. Once it breaks and things are normalized, then we can shift into finish phase one and finish phase two, where we get in that lull where rates are just held at a specific points. And then we can get into phase three, we start reducing rates. But you have to understand, to get to phase three, something really, really, really bad has to happen. 2008 pandemic, think of those kind of major events. Something big like that has to happen for rates to start being reduced. So just keep that in mind. That is typically what we are doing. And now they can start reducing rates at a slow pace as well, which I think they'll probably more than likely do, just because of how they had to handle this inflation, and understand that this inflation isn't over yet. Like we're gonna get another big spike. We're seeing that in energy and food and rental units. And so I think this year is still going to be a nasty year. Still massive amount of layoffs, and then we see, right, like I've talked about, the AI could potentially help with some of the employment numbers and stuff like that. But you have to understand, I think it's the initial sticker shock of AI. Yes, it's very helpful, but it's still a lot of the things that it produces is just good guidance. It's a step above Google, but it's not to replace somebody just yet. There's still a lot of tweaking and stuff that you have to do with that. And so it even the Chat GPT, I think, had the same issue, right? So Google essentially almost crashed because of their demo day, and then because it messed up and calculations were wrong. ChatGPT is the same thing, right? Like it's still good, but it's not going to be replacing somebody. It's a good tool, just like Google is. So just be mindful of that. So it's not at the point where it's going to replace anybody. You still need a professional eye to look at it and to be able to fix whatever it is. But it will give you a good base to start with. So that's something you have to keep in mind. AI isn't at a point to where it can replace people. So with that being said, that's what we got to this point. Let's start getting into, let's see, some of these events and what's going on here. Now that I've talked a good chunk of this video, but those are things that we need to be aware of. Now coming into this week, we got the minutes again. That's going to be really important. Kind of trying to guide, like I said, where we're trying to go next is going to be extremely important. Especially on the next core. Okay, if we start seeing increases in core, it's going to be a problem. Again, you have to understand that the core has been altered to only 1 year now. Those numbers are trying to pull them down so it doesn't look so dramatic. I think what's going to happen is that we're going to get a bigger jump in the next report, but it's going to be diluted by what they've done on the report. So, and then we have core PCE. Like I said, they're going to have a lot of this data is going to have more weight because people are trying to gauge what the next policy move is. And the only thing they have to base it off of is data. And so if data is at us, depends on how it ranges with essentially what the expectation is. And if it's way out of expectation is when you're going to see bigger moves. And then upcoming pivotal events, like I talked about, monetary policies not until March 22nd. I can actually remove this core inflation report here because our next one will be in March 14th. Upcoming earnings this week. A lot of these are there's still some really good earnings that are going on, and they're good to play continuation. It really just depends on how the market sentiment is. If the market's going to hold, you'll get bigger moves out of these. And so I'm going to be watching a lot of these. And Walmart in particular, I don't like playing Walmart or HD, but on earnings days, they are fun to play because of the fact that they could have huge moves. And Walmart is interesting because I want to see, it's going to give us insight into what's going on with the consumer. And so that's more so why I put Walmart on here. I don't like playing it, but I want to see what the stats are from Walmart this week. Nvda, I like Nvda. It's been running. It's very overextended. And if the market wants to start selling off, Nvidia is one I want to watch. And then plus they have earnings on top of it this week. So I do want to watch that. Thursday, we have Square. I've always liked Square. I play Square. I haven't played Square recently, but I want to start introducing some of these because now we're starting to get more bigger moves, and a lot of these have already taken big hits. And so, with FOMO and these pushes and everything, they're making some bigger moves. So I want to start uh, bringing these some more to the watch list. This one actually is incorrect. Let me delete this. That was last Friday. And so expected moves. I removed Apple from here because Apple, not looking at Apple so much as a safe haven anymore. But SPX, as you've noticed, if you watch my videos at all every week, you'll notice that the difference here. So we are starting to come back down. So the expected move for this week is not going to be big, but if it does move big off some news, these are times where you can take advantage of options. As if there's a news event that happens, the options haven't priced that in, so you can get bigger moves. So something happens for the minutes, you can get a huge move on the index and capitalize on those options. So that's why I kind of watch these things, kind of see what to play, what not to play. Tesla still has a lot priced in. Again, it's made a monster move. It started really selling off. That 15% that they're trying to price in really isn't going to matter. It depends if you have to watch puts and options essentially to see. Sometimes it's the call side that there's, they try to price in a lot of premium, but the put side, there's not as much premium. So you can make a lot off the put side if we do start selling off heavily. BA 7, so that's still high. JPM's back to normal. Nvda very high, obviously, because it's expectations this week. I don't know if I'm going to play. I might just hold Nvda kind of till Wednesday, and then capitalize depending on how the market plays. You can capitalize on options if you hold them throughout the week. Because of the premium buildup into earnings, but you don't want to hold it through earnings because right after earnings, a lot of that premium dies off. And so you'll lose a lot of that. So if you hold that overnight and it doesn't make a huge move, you're going to end up just burning a lot of premium at that point. So it's better to kind of play Nvidia essentially after earnings once the premium dies off. So either beginning of the week or right after earnings, and not right after earnings at the bell, because there's a lot of premium adjustments right after the bell. You have to let it sit for like 10 minutes so the premium can adjust after the earnings. So you have to keep that in mind as well. So that's what I got for that. Let's look at some technicals here. SPX. So we had that massive selling towards the end of the week. Again, we're playing this 100-point range. So we're roughly, I would even count to the bottom here. So the 40-20 up to this zone here, roughly ending at that 4,200. So we're just kind of just playing this 100-point range until we get like pivotal news. Like people want to know exactly what's going to happen. Institutions want to know exactly what's going to happen before they start buying into a position, and it's already been overextended. Institutions are not really risk on right now because there's still too many undefined what if scenarios that could potentially happen. So, but the bad thing here is you did break below the 20 EMA monthly. Now, if this is if we open below essentially the 4081 for the week, that could be a problem. We could dip all the way back down, and we could have broken back down into the lower 100-point range here. So we essentially got roughly around a 73-point range. So maybe we will be playing the 4073 down to the 4K mark. Again, the 4K mark has a lot of support. You did get the break, and now you're kind of getting the retest. My question here is if this retest on a normal break in a normal pattern, if you get a strong break like this, you're going to normally get a pretty hefty pullback, and then you're going to get a monster bounce out of this. Typically, now that's not saying it will happen. I'm not trying to lead into a bull rally here, but the bulls have been very strong, and they're not letting this thing just die off. But the problem is, again, you got the consumer in the pressure cooker, and so you could have a very big black swan event that this isn't going to matter, and this is not going to play out. And this is why I talk about risk management is so huge, because if that black swan hits and you're thinking you all in right here, and that black swan hits, you can just butter straight through this and you start selling off again. Something I've pointed out previously, we've had 660-point moves up and then 820 points down. So just because we're up doesn't mean we're going to remain up. There's still the sentiment of the market is still not good. That's what you need to keep in mind. We're coming into a natural sell-off as well. So this is why I talk about these things. I don't just talk about random jargon just to talk about it. because it's a pivotal event. And I talk about having a thesis. Again, I am a permeable, and I don't like the current sentiment. The current sentiment is not good. If you can't go to the store and realize that nothing is normal, right? Things are just way overpriced. There's a reason for that. It's called inflation. Inflation just doesn't go away. So, being said, this is what we're about ready to uncrack here over the next couple of months. Whether that's sooner here at the end of February, or maybe that's not until July. But things are not looking good. And so we normally have that typical uptick in January anyway because of the earnings rally, the Christmas rally, and so everybody's buying. You got everybody getting their tax returns, and so there's a lot of that kind of stuff going on. So you get these massive moves towards the part, and then we just sell off heavy normally, and then we get into that lull period, and then we rally in the back half of the year. Which I'm expecting, but I think the sell-off at this point, at this time of the year, is going to be really bad, and so that's just that's just the normal cycles in the market, and again, the sentiment is not good considering what is going on. So that's what we got for SPX. So watching that, if it does stay up above on this range, if it does stay above 4082. Then again, the 4,200 is kind of what I'm aiming. So I don't expect the market to really move out of this range until it gets some sort of bigger news, bigger catalyst. Maybe the 50-point basis move talk was enough, and the PPI was enough. Maybe the consumer price index is going to potentially move this thing, or the FOMC meeting notes could provide the thought process. Well, maybe we need to actually price in a 50-point basis move. Then this thing could come back down. At least back down to the 4K mark, and then we kind of sit there and wait, and we hover, and maybe we play this 100-point range until the next core. It's a strong possibility. Again, we played this range for quite a while, and I could see us dropping back down and just playing this range until we get some more data. And then if the core is bad, then we break that. That'd be enough to break the 4K mark and bring us back down to this range. And then a 50-point basis move would really start causing us to sell off at that point. Potentially. Again, we have to wait for these events. That's why I highlight these events. Because there's, again, a lot of what if scenarios. Let's look at Bitcoin real quick. So Bitcoin, again, nice pump up roughly to the 25. Still needs to break out. The dollar and the Bitcoin correlation, Bitcoin and the dollar. You have to keep in mind that Bitcoin was running pretty hefty when inflation was initially talked about. I'm starting to wonder if that might be the case here as well. Crypto might start running as a hedge against inflation because of the instability of the dollar in the financial system currently could potentially cause this thing to start ripping. It might be a strong possibility. So we might see that a differentiation between the dollar and the correlation with everything in crypto. But again, you have to keep in mind that Binance, there's been a lot of suspicious stuff going on with Binance. If Binance folds, that is going to take crypto down. That's not saying it will, but like I've always said, you don't know what's going to happen. So you have to have risk management. If you're going to go all in, well, what if something happens with Binance overnight, and then crypto, you get access to the market all the time, but if something happens overnight, and what if it causes it to crash, right? Are you prepared for that? You have to be prepared. If you're okay with that, was your initial plan? Well, it can all go to zero and I would be okay. You have to be okay with that. If not, then there's always a potential black swan event. But nonetheless, I could see this thing potentially pumping, but again, I'm still concerned. My concern with crypto is Binance and what's going on with Binance. And I still think there's going to be a hard reset on everything and normalization of everything worse than what it already is. But we wait and we see. I mean, you can't just play that as long as, again, risk management. And I would be prepared if I am not currently holding Bitcoin, but if I am holding Bitcoin, I'd be okay waiting 5 to 10 years if it dipped even lower than 16K, because of that aspect, right? Like that would be my plan. Was I don't care if it dips because I'll just buy more, right? In my opinion, I think it's going to dip lower than what it has, but I'm waiting for that to play out. So nonetheless, if that's what your plan is, then it is what it is, right? If you're investing, you went with the intention to invest and not just for a short-term gain. So the dollar's been it's been getting pretty active. But the thing is, and something I talked about here, is anytime you break a level, see how we broke this level. Normally you get a break and then you get a strong retest, and normally you get a hard rejection and start selling more. So we want to see if the dollar will get a hard rejection and start selling here. You got the dailies and weeklies here that were just retested. We might just get a hard rejection and start selling off, and this thing could potentially go back up. But again, the sentiment is not good, right? Like I think the market's like overcome this. Well, things are just fine and dandy. So by design, the market will push up. So that will cause the dollar to naturally start selling off. But again, the biggest concern here is that it may not. Right, and if that black swan event happens, none of that's going to matter. This is going to blow straight back through this and continue up, break past the 105, and then if this does break past the 105, you're going to be in some deep trouble at that point. So we'll see what happens with the dollar, but at that point, I think I just think this again, the sentiment is not where any kind of bullish stance we continue to have. You just have to be extremely cautious, in my opinion. Again, I myself am mostly cash, so, or pretty much all cash, so I'm waiting. Let's just put it that way. Tesla, let's see here. Tesla started to do a big sell-off, and then, like I said, towards the end of the day, it started popping back. Again, one thing I don't like about this, everything's very overextended. This thing needs at least coming down 50% of this move. So still looking at least at a 155 pullback. It can't break. This 215 has been almost a solid wall. So if it can't break that, maybe we get one more reattempt this week, and then potentially a sell-off. Does sell off looking around the 184. See if it holds there. It might play this range here. But if it doesn't, again, if we get a bigger catalyst, I want to really keep this more so. I'm more favoring the downside. So I really want to watch this. If we do start selling off heavy, I'm looking at Tesla and Nvda because they've had more overextended moves. Again, this is a very explosive move. This is not natural. This is not going to hold. So you have to be mindful of that. I think we're still going to at least see roughly around a 150 point move once this thing starts selling off. So just waiting to try to capture that move. Again, you got a lot of support here, roughly around the 180. So you do have to be careful of that. This thing's going to have to clean break this stuff to potentially start coming back down. So I'm watching that there. On the video, like I said, this is another big one. Very overextended move, 50% of this move. So kind of watching around this 185 for this. So if Nvidia can break below 208, could get a huge dive down here to the 188. That'd be roughly around the 50 point move that I'm kind of looking for, 50% of the move I'm looking for there. So definitely want to keep this on track this week. Again, it's got earnings, so you have to be very careful. There's a lot priced in with this. So if you're not grabbing it, like I said in the beginning of the week, or unless this thing is really dumping heavy, you have to be careful because it's again, the options are going to be very, very expensive going into earnings. BA again, very overextended, still playing this range roughly of 205 up roughly to the 219. So it needs to either break over 219 or break below the 204 for this thing to really see anything potentially. Again, the market's very undecided right now, so at least you're getting, it's pretty big range here, but again, if you want more explosive moves, we need a bigger catalyst to really determine which way we go. Again, things are not great, but there's no new bad news. So until that happens, you're going to get chopped because of the undecisiveness. And then by design, we should be pushing up. But again, JPM, same thing, very overextended. Now we're just kind of just chopping and waiting. Bulls need this thing to break over 144, hold over 144. Again, if it does break, essentially the 3, see, this is just like the market. As it breaks into this range, it plays this range for a bit, then it breaks up into the new range. It kind of just plays that range for a bit. I'm kind of thinking if we get bad news, we just break back down into this range and shop around here. And if it's really bad news, we break down, fill this gap, which would kind of lead to next monetary policy. Kind of what I'm thinking is the way this thing's going to play out. More so because for us leading up, there just isn't enough, even by design, there just isn't enough positive news to keep us pushing up. Now, again, it depends on how quick the bad news comes out. If we keep getting bad data like the PPI, maybe the meeting notes say 50-point basis move, that would scare the market. Or maybe the next data set is bad enough, or mixed expectations bad enough to where it's going to scare the market. Because I think a 50-point basis move is very much possible coming into the next meeting, especially if that core starts rising back towards 7. That's going to introduce a lot of panic and break us and potentially get rid of this overextended, this move that hasn't been essentially addressed with any back testing. So that's what I'm kind of looking at there. So now that this video is, it's been a very long video, so there's a lot to go over this week, a lot of data sets to watch. I try to get more detail about stuff. So with all that being said, leave your comments. Let me know what you think. What's your thesis? What data sets are you looking at? Drop a thumbs up just because of the cause, the culture. And until next time, I'll see you guys later.